All right, it is exactly 11:30 Eastern Daylight Time. Thank you for joining us for the DICOM webinar, Unlocking the Potential of Your Loan Review Department. I am Jim Exander. I am DICOM's Senior Vice President of Sales and Marketing. My primary role is really to work with clients and non-clients to understand the key challenges and identify the emerging needs related to loan review. I collaborate with our product owner to also ensure that our product strategy evolves to solve these challenges in a very meaningful way. So that's really why I do these webinars, and that's why I try to give back to the industry some of the things that we've learned from really you. So we collect all the information and try to make it meaningful to help you improve your loan review departments. And I am joined by Skip Constantine. I'll pause for a second and let him introduce himself as well.
Thanks, Jim. I come from a retail banking background, and I also did loan review during the credit crisis for one of the primary regulators.
Excellent. Thank you for joining us as well, Skip. So a little bit about this webinar, just to make sure we level set before we dive right in. I've been with DICOM for a little over 2 years, and in this very short time, I've done 3 loan review industry surveys and interfaced with a lot of very progressive and exciting banks and learned a lot about loan review. And in this very short time, I've really identified that loan review is evolving, and a lot of this evolution is placing increased pressure on the department heads and loan review staff. So this webinar is really designed to give some insight and perspectives to help you unlock the potential of your loan review department, so hopefully to relieve some of the pressure you've realized over the last several years. The webinar protocol is you will be muted, and that's not because we don't want it to be interactive and we don't want to hear from you. It's really just because we don't have time based on the ground that we're going to cover, and we do want to eliminate background noise. I don't know if anyone's ever been on a webinar where somebody puts on a mute or hold, and everybody on the webinar gets to listen to hold music. So we're gonna not do that today. And I do encourage questions and comments to be submitted through the GoToMeeting chat panel or via email. And I would encourage you to email me directly. This creates a better dialogue and creates a better opportunity for us to get to know each other and talk about what you may have loved about this webinar, may have questioned about this webinar, or really some insight as to how we could improve webinars going forward. Also did want to invite you to follow both Skip and I, as well as DICOM Software on LinkedIn. We have a pretty strong presence on LinkedIn, and we're trying to build that presence over time, and we're putting out content like our industry survey, as well as other good white paper items, as well as case studies that might help you better understand your loan review department and identify areas for improvement. So please do, by all means, if you send me a LinkedIn request, I will accept it. I can guarantee that. So moving on, where did we get the idea for this webinar? And really it started with the 2019 annual loan review survey that we do. And what we found really is a number of questions and responses that indicate loan review is really under increased pressure to do more. And what is the kind of areas that provided the evidence there? And we found that exposure per reviewer is increasing while penetration percentages are remaining constant. Very key indicator of workload, really exposure per reviewer. And if those numbers are going up, clearly you're being asked to do more. And this is compounded by the fact that we ask another question that's about additional responsibilities of loan review. And year over year, we find very consistently that acquisition due diligence is one of the top responses. However, we've had some new responses that became increasingly frequented in that survey around portfolio analytics. And we understand that there's a little bit of concern about the economy, concern about a credit cycle. Credit quality has been so good for so long, people are starting to get a little concerned. And it looks like loan review is being asked to perform a lot of these analytics around emerging risk review and portfolio concentration risk and things like that. So we're definitely seeing that, and that's evidenced in the industry survey. We're also finding things like quarterly risk assessments and vendor management becoming more common. So if you're on the phone nodding your head listening to this webinar, we hear you loud and clear, and we're here to help. We also find as we interface with prospective clients for demos, there's been an increasing concern around, please show me how I can get some efficiency gains out of your system, because we are stretched so thin. Our bank has grown, our portfolio has grown organically, or we've had an acquisition and staff changes. So we are really, really tapped out, and we got to find ways to optimize our process. So again, we hear you loud and clear, and we're going to show you some ways that you can optimize your processes. And did want to show just the level of increase here. In the last 3 years, from 2016 to 2019, we looked at exposure, C&I and CRE exposure per staff reviewer, compared in 2016 here in blue and 2019 here in orange. Based upon our industry survey, we're finding that bank sizes 1 to 5 billion are looking at a 23% increase, and large banks here at the 50 to 100 billion range are looking at a 52% increase. That's huge, and clearly you're under a lot of pressure to improve your efficiency. So as we move forward, we're talking about unlocking your potential. What does that mean? What are really the capabilities and attributes that we would be seeking to be a high-performing loan review organization? In order to level set there, I'm going to reference an RMA presentation titled Transitioning Your Credit Review Function. This was co-authored by somebody that's a friend of DiCOM, and I really do like this presentation and would welcome you to look for that via RMA, or even reach out to me if you need a copy. It's a great presentation, and one of the slides really discusses the value of credit review and the value increasing over time. And really like this because it really does point out kind of the basic fundamental starting point for a new loan review department is really down here in the check the box approach. As you move up, increasing the value of your organization, you're looking at asset quality and credit process, doing more risk-based scoping, and your approach is a little more focused, and also providing reporting and outputs to help identify root cause analysis to improve your underwriting or whatever functions that you're looking at. And also then kind of going up here to kind of the ideal state where you do an ongoing monitoring, risk data analytics, and emerging risk review. And this is where we find most people that reach out to DiCOM are somewhere in here, and they're wanting to get here. And that's why I've kind of augmented this. And really this slide talk about time and technology on how you can really improve your loan review process. And technology plays a role both in the speed at which you can get from here to here, also just the ability to provide the capabilities. And what we're hearing on our demos is, these risk data analytics and emerging risk review is all about an efficient way to identify direction of risk, performing ad hoc analysis based upon what the needs of the executives and the boards are, doing risk trending, and really aggregating a lot of loan review risk up to the portfolio level to identify emerging macro level risk. So that's sort of where we want to get you, and we're going to talk about some ways that you can leverage DiCOM and just some other perspectives to get there. So again, using that same presentation, I've extracted out kind of the ideal state here, and what are the attributes of a high-performing loan review department. So I'm borrowing this from the RMA presentation as well because it's a great presentation. And these attributes are: one, uses talent to its maximum. This is really a thing that's related to people, and you can probably see where I'm going here. This department, high performing, prescribes and delivers on a very deliberate program. You begin with the end in mind and you execute with that. That's really a process thing. You also develop and execute a marketing plan and brand. This is something that I've found is not done very frequently, but when I've identified loan review organizations that do this effectively, they are well thought of within the bank, and they typically are able to garner financial and resource support more effectively because they've done a very good job of promoting the value of loan review. So I won't tell you exactly how to do that, but I would tell you that's partially based upon your vision, on where you being able to communicate your vision and the impact of this vision, and being able to also deliver on some of those capabilities that we talked about on the previous slide and getting higher up on that value continuum. So that's something that I would certainly encourage everyone on this call to try to do better, especially if you're going to try to garner some financial and resource support. Another attribute, establishes strong relationships with industry peers. This is really a people thing. I'm also going to tell you how it could be a little bit of a technology thing, and also uses innovation. That's clearly a technology thing, as well as keep things simple, focused, and actionable. That's a process thing that can be improved through technology. So these are sort of the things just to kind of get our headspace going. This is the type of thing that will help you develop a high-performing loan review department. And I'm sure as you look at these things, you're probably saying you do some of these very well, and maybe some of them not so well, and that's where we're headed here. So again, now we've got a theme. In order to communicate things effectively, I always like to have a theme. The theme moving forward will be people, process, and technology. And again, from a people standpoint, do you have the right or enough people in the right seats? From a technology standpoint, does your technology support your objectives and your brand? And a process standpoint, are your processes optimized, simple, and action-oriented? And just one note that all these three things play together. A weak link in any particular area will exacerbate the other two, while a strong link will help support the other two. For instance, if you've got strong technology, it will enhance the effectiveness of your people and can help streamline and simplify your processes. So let's start with people. Unlocking the potential of your loan review department, leveraging people. Now again, I'm not going to sit here and be an HR consultant. What I'm going to do is show you some ways that DiCOM can help you ensure that, one, your pay scale is competitive for a bank of your size and region, and that you have the appropriate staff level given your organization's size. We do annually the Loan Review Industry Survey. And this is a great resource to leverage to determine, from a benchmarking standpoint, one, is my pay scale good, and do I have the right amount of people? So these are some graphs that we have within our industry survey, and I'm happy to provide this to anybody on the webinar. It's on our website as well, but this will help you benchmark, hey, I'm an organization of this size. This is about where I need to be from a staffing standpoint. If I'm an order of magnitude lower or higher, there might be cause for concern unless there's some real strong rationale for that. And also, there's great salary data in this industry survey. And we also have a regional component, which I'm not showing here, but you can look at average, kind of national averages here for a junior staff member, a senior staff member, as well as a manager, and fit it for your size bank. And then there's also regional data, which you can cross-reference to see, are we in the right spot to attract the right talent to our organization? So another aspect of unlocking the potential of your loan review department is really establishing strong relationships with industry peers. And this is the obvious one. I'm sure most of the people on the call are already involved with the RMA, but I would encourage you to be involved with the RMA and go to the loan review events that they have, the roundtables, the conferences. They're great. We attended the one last year, and a few people on the call were there with us. So these are great events. Also, start your own peer group, and this can be done by bank size or bank region. And this is a newer concept to us at DiCOM because we were actually invited to a peer group recently, and we found that there's about 5 or 6 banks in a particular region that get together quarterly, and they talk about key things that are happening in their environment with their portfolio, any emerging risks they have, and how they might be adopting some strategies to take care of this risk. So this is a really great way to network and understand your marketplace by working together with your peers, and something that I would encourage you to seek out and do. We also have the DiCOM ecosystem, and you don't have to be a client to take advantage of it. Now, there's certain things that only clients are privy to. We have an annual user conference, which is by definition almost exclusively users. However, we do have strategically some non-users that might join us from year to year. We also do our annual loan review survey. If you're not participating in that and consuming that, I would encourage you to do so. Now, we also have monthly product user meetings where we also do talk about innovation within the product, as well as identify emerging trends in the marketplace that are of interest to our group. We also have a banking advisor group that's made up of clients and non-clients. So again, we definitely have a lot of touch points in the industry, and there's a lot of good opportunity for you, even if you're not a DiCOM client, to get involved. So moving on, let's talk a little bit about process. Now, we've got a very simple loan review process illustrated here at the top, ranging from scoping all the way to the electronic line sheet review area, summary reporting, and then report findings. What I would encourage anyone to do, again, I'm not a Six Sigma black belt, but I do have some experience with value streaming, and I would encourage you to take a look at your process. And is your process efficient? Are there any areas that you're spending too much time and too much work? And the answer is probably yes, and usually yes when we interface with prospective clients. What aspects of your process are error prone? What are the non-value adding activities? And surprised often that over time, processes get more and more complex because people want to keep improving them. In those quote unquote improvements, they add everything but the kitchen sink, and you end up with a very unwieldy process. So what I would encourage you to do is to look at those areas and then also identify, can we get there with the people and technology that we have today? If not, then I would certainly recommend, first and foremost, simplifying your process, but then just reach out to DiCOM. Just the very interaction of talking with us and letting us evaluate your process and provide a detailed assessment, you're going to learn a lot about your process, whether or not you move forward with DiCOM or you decide to just improve your existing process. You will learn a lot just by engaging us. And selfishly, we're going to learn a lot too, because we're only as good as our understanding of the marketplace. So we do love to interface with prospective clients, even if it doesn't end up resulting in a sale. And now, really, my sweet spot, I'm a technology guy. We're going to talk a little bit about technology and the role that can play within helping you unlock the potential of your department. So based on really market and client feedback, we've identified some certain things that loan review technology really should do to provide maximum impact. And the first thing it really needs to do is interface with core bank systems. That's just kind of the refrigerator needs to keep food cold. A system needs to interface both in an automated and manual way to import loan review data. It really needs to optimize the entire loan review workflow, focusing on scoping, the line sheet, and then reporting, both from a micro and macro level risk perspective. And this is really critical because a lot of systems may automate one small aspect of the loan review process, and in our endeavors and our demos and our interactions is really, if you're not automating the entire workflow, you're really providing pockets of manual process and opportunities for error. So that's really critical. And one thing we've learned more and more over the years is that it really needs to be compatible with the existing review methodology of our clients and our prospective clients, meaning that you don't want a prospect to say, hey, I've worked really hard at making this review methodology fit our bank's risk profile, and we're really happy with it, but now we've got to go and change everything if we're going to implement a system. You want the opposite. You want the system to fit your process, not to make your process fit the system. And then a system needs to be adaptable and sustainable for long-term viability. That sounds obvious, but there are some real caveats with different approaches to technology that need to be factored in when you look at the long-term sustainability. And then last but not least, any system really needs to be cost-effective and provide a return on investment. So now that we've identified kind of that there is a true need to optimize processes, and technology is one important way to do that, what are the options that you can consider? you can consider a manual process. Really, that's you know, what a lot of you on the call are probably doing, and you are probably having varying degrees of success in that perspective. Then you can look at customizing an existing bank system, and that's really all about leveraging a system that might be used for audit. It might be an origination system, and trying to force it into doing some basic loan review functionality. And then there's obviously the allure of developing a custom system, and that's really utilizing your internal resources to develop something that is a bank-specific solution. And then last but not least, you can purchase a vendor-supplied system such as CQS, and that's a built-for-purpose system designed to automate the entire loan review workflow. So I've been involved with loan review long enough to get acclimated to scorecards, and I figured I'd produce a very high-level scorecard as to how the different technology options stack up based upon the attributes of the ideal solution. And no surprise, manual process doesn't stack up extremely high just because it's really not an automation solution. It's the ability to leverage existing tool sets that your review group might be familiar with to just perform the function. And it's inefficient and error-prone. The opportunity to customize, for instance, a audit system to try to do some basic loan review functionality is really a square peg in a round hole. It's also not sustainable because the system isn't built for purpose to provide loan review automation. It's not going to obviously evolve in that way. And then custom developed systems. You see, I've got an island here because there's some true benefits to a custom system, but there are also some very, very real drawbacks. And one, we talked about leveraging relationships with industry peers. When you've got a custom system, you're kind of cut off from the world because you're using a system that's really only used by those in your bank. And what we've found here at DiCOM is that the real challenge is really the adaptability and sustainability. Usually an implementation of a custom system is pretty good for the first 2 or 3 years. And then its value and stability really diminish over time until a point that it tends to become unwieldy and really no longer aligned with the needs of the bank. And that's usually when a lot of prospective clients reach out to us. So we're privy to when that happens, and it usually seems to be between the 5 and 7 year mark. And then last but not least, there's DiCOM CQS, which is designed to really optimize your entire process and really optimize all the attributes of ideal technology. So moving forward for the basis of time here, we're going to focus on a few of these. Optimizing your review workflow, that's really all about unlocking your potential, enhancing your current methodology, and we are going to demonstrate how it can be cost effective and provide an ROI. So as we talk about optimizing the entire review workflow, I'm going to hand it over to Skip, and he's going to perform a little bit of dialogue here to illustrate how CQS can optimize the entire loan review process.
Thank you, Jim. We'll start here with scoping and show you this is how CQS really integrates the entire loan review system or process into one system. You scope the data out of the core or the data warehouse. It easily goes into CQS, and then you can start sorting it for the scope by large relationships, substandard loans, or different industries, past dues, any type of trends. And the process can be shortened because CQS will remember your scope, and then the next time you go in and do it, you just press a button and it performs it for you in a few minutes. Assignment of credits. When I did loan review, we just worked down the lead sheet, first come, first serve, and you can do that in CQS, or you can assign credits out in advance if you have a C&I specialist to work the more complex C&I loans, or work first come, first serve. And then review process. This is where you work in the electronic line sheet, and you're going to spend most of your time. With our process, the electronic line sheet pre-populates, so you just work the file and go through and update your findings, and it remembers all the findings to be saved later for reporting. And in the summary process, or the reporting piece here, all the findings flow into the summary, and you can report them at a granular level or a high-up summary level, depending on who the user of the report's going to be. And you don't need to retype anything. You just go in and select a new report, and the information you want flows through right into that report. So with those findings, you can look for trends, show them to management, and look for emerging risks, and it makes it real easy, and you don't have to retype 30 pages or spend time typing up reports. So CQS enhances your current methodology, and here's where you can really bake your current methodology into the CQS system with these worksheets. The reviewer can go through and answer the questions. There are text boxes, so if a simple checkbox doesn't answer the question, they can put some additional detail in the text box. And what makes it really easy is all the data that you have here flows through to the summary reports. So once again, you don't have to find yourself typing in the information. It just kind of flows right through. And you're not at the end of the exam typing up 30 pages. And this process also makes it easier for new examiners to get used to your process. So this kind of guides them through the process, and they can work an exam and ask questions as they go. And I'll turn it back over to Jim.
All right, thank you, Skip. And I'm going to pause for a moment just because this functionality, I couldn't be more excited. This is really the culmination of a lot of feedback that we've gotten from the marketplace as well as our existing clients. And I think this is really going to revolutionize the way a lot of people do loan review. It's going to be simple, easy, effective, and provide an easy means to very, very strong reporting. So this is really something that we couldn't be more excited about. And we're going to be scheduling a webinar probably in the October timeframe to review this functionality and also potentially get some last-minute feedback as we refine it. So would certainly encourage people to be on the lookout for this particular webinar coming up as well. So did want to then talk about how CQS can provide a significant return on investment. This is really critical, and a lot of folks, they don't even call us because they're concerned that the price is going to be too overwhelming and they'll never get approval. And we have made a lot of changes to, one, the value of the product, and two, our commercial approach. So fret not, we will work with you to develop a strong return on investment. But our clients typically indicate a return or efficiency gain of approximately 20%. So just using that as a baseline for the starting point of return on investment, we've got a mid-sized bank here with, say, 6 staff members. Say the staff members are fully burdened at about $75,000 a year, which is certainly not extremely high based on our salary data that we get from our industry survey. Then we apply a very simple 20% efficiency gain, and we'd get a 90% efficiency savings just when looking at that at a high level. And I can tell you that for a mid-sized bank or a bank at the size that would indicate a 6-person staff, the cost to acquire CQS is far below this number. So you're getting an ROI in a number of months, not years. And then there's some other really strong benefits that really occur when we do an assessment of your organization, identify really where you headed and what are you trying to do. And there's some very strong benefits around the scalability. As your bank grows, you're not going to have to invest in as many headcount. There's an opportunity to increase portfolio penetration. If you see some emerging risk and you want to ramp up your coverage, you can do that quite easily with CQS without, again, having to leverage additional talent. We're also going to provide the ability to give impactful reports to executive and board members in a very efficient manner, and that's pretty priceless when you can deliver that type of value to the board. We're going to help you achieve smoother regulatory exams, and we're also going to provide powerful tools to help you identify emerging risk. And I know the way the world is today, and with the concerns about where the economy is headed, this is becoming a big deal, and we've got tool sets to really help you do this in a very effective and efficient manner. So as we're wrapping up, I wanted to just kind of summarize again how DiCOM can help play a key role to unlocking the potential of your loan review department. Now, certainly we've presented some other non-DiCOM ways that you can unlock your potential, but did want to focus on what's DiCOM's role. And from a people standpoint, would encourage you to leverage the DiCOM ecosystem. Get involved. If you want to attend our user conference, reach out to me. Let me talk it through with you and see if that makes sense. Definitely would encourage you to look at the industry survey. We put a lot of good information in that, and we get a lot of good feedback from the marketplace as to how we can continue to improve that. So certainly want as many people participate in that as possible. From your process standpoint, evaluate your processes and schedule a CQS demo. Just interact with us. I think you would find it really beneficial just to talk through your process with a third party and really understand what maybe some of the other folks in the industry are doing and what are some ways that we can get efficiency either with or without CQS. And then from a technology standpoint, I would encourage you to make innovation part of your brand and market that internally to garner support. If you really do want to become a high-performing organization, or you want to continually improve, and you think that you're already there, you make sure that technology supports your mission and your goals and your objectives. So at this point, thank you for your time. I hope that you found this to be beneficial. We're certainly always looking for ways to improve our webinars, so reach out to me directly or Skip directly, and go to our website and download some of the resources and see what else we have out there. We'd love to interact with you, and thank you for your time.